We have Sudip Bandyopadhyay joining us on the show. Very good afternoon to you, Sudip. Thank you so much for joining us on ET now. And I believe now all eyes and all attention is shifted towards what will be the likelihood of the trade deal between India and the United States. We know that Piyush Goyal is in the United States for a 4-day meeting and trying to carve out some the trade deal with the United States. There are a lot of news or reports floating around what sort of a deal they could actually cut with the United States. But what's your take? Now, what are the markets waiting for? You think it's just a point of consolidation because too much has happened or too much has transpired in the last 1 month?
Oh, absolutely right. I think, more than the trade deal, of course, there are uncertainties and speculation around what the trade deal can or can't do with bit of consolidation, profit booking, or bit of a risk aversion, whatever terminology we may choose. I think it's pretty much on the back of that. Things have moved up quite a bit in the recent past, over the last 1 week. And a bit of profit booking, bit of caution was warranted. And that's what pretty much we are getting kind of displayed today. Some amount of concern is building definitely around the trade deal. And, the 2nd June, by when that 90-day period runs out, is also around the corner. So there is a race against time to get the deals done. And many countries are, at it. So we'll have to wait and watch because, US policy making currently is inherently very volatile, and we'll have to be bracing for some amount of turbulence going ahead again. So it's better to be a bit cautious, better to be a bit guarded as we approach 2nd June.
That's the take on what our trade deal could potentially hold for us, and all eyes are going to be focused on that only. But Sudeep, also want to get your sense on the top nifty loser today, and that's Eternal. It has been consolidating over the course of the day, but now it's lower by 4%. Yesterday also the stock was cracking in trade, but today we have news flow that the board has received shareholder approval to cap the foreign holding at 49.5%. Remember almost a month ago when this announcement first came into the market, when the shareholder approval was pending, this was seen in a very positive light, and today when this approval has come in, there has been a sharp cut on the stock of 4%. This also means that there could be a potential loss of flows coming in from global indices, for example the MSCI index. Help us understand why this divergence in terms of the stock move that we've seen for Eternal, and what lies ahead fundamentally for the company.
I think fundamentally, if you look at it, they're making a conscious call regarding how they want to run their business. If they are going to be based, they're keeping the foreign holding below 50%, they will be entitled to do lot many things which a foreign entity, which is by definition companies having more than 50% foreign shareholding, will not be allowed to do. So they have chosen that, and they want to operate those dark stores. They want to have inventory with themselves, which they want to sell directly. So these are the things which will probably give them benefit in the long run, and their business structure fundamentally will be different from a Zepto or even a Swiggy. And that's the distinction they're trying to draw. Yes, it will definitely ensure that the flows don't come the way they will come into a Swiggy or a Zepto when it gets listed. But I think that's a conscious call, and it's a conscious call based on the model they're choosing to go ahead with. So I won't read too much into it. There are business models which are, very solid and sound based in the parameters of a domestic company. Again, there are advantages of having foreign inflows into the company. So we'll have to see how things pan out, how they're able to scale up their business. But as things stand today in front of Eternal, I think their quick commerce business is in the phase of scale up with intense competition, and that is eating into the margins. Under the circumstances, they have very clearly said that the margins will be under pressure, and market is cognizant of that. So I won't read too much into today's this correction, which is on the back of this fear that foreign inflows will come much lower in Eternal going forward. Yes, that's a fact, but I don't think that will prevent Eternal from performing either in the P&L sense or in the market sense.
All right, so that's the take coming in on Eternal and also the rest of the quick commerce players. But let's move on and let's talk about national news, given the fact that there are 7 all-party delegations that will soon visit key nations later this month, reflecting India's collective resolve against terrorism. The government has shared the full list of members and details of the nations that they will be visiting. Sumita is here with all the details. And Sumita outlined to us the 7 actually groups that have been formed and which are the nations they're going to target this time around.
Absolutely, Cheryl. Now, this is a crucial diplomatic outreach that has been made by the government of India. These 7 delegations that will, with several opposition MPs, with diplomats as well, will be visiting global capitals to ensure that there is one syndicated message that is going out, one collective message that's going out from India, and that is its no-nonsense, no-tolerance approach to terrorism, especially the one that's emanating from Pakistani soil. So these opposition MPs will be briefed by the Foreign Secretary. Remember, there was a briefing yesterday as well, wherein the Parliamentary Committee on External Affairs was briefed with respect to India's approach to Operation Sindoor, how precise these strikes were, and perhaps the same briefing will also be given to opposition MPs and, like I said, other members as well, as part of these 7 delegations, 7 groupings essentially, which will travel to different parts of the world to send out one message from India, that is, India is a victim, Pakistan an aggressor, and hence both of them cannot be equated. The other thing to know here is that we have accessed, in fact, the travel schedule. So all of these 7 delegations that are traveling, they are essentially traveling from the 21st of May, and the last one then travels till the very 5th of June. In fact, we're given to understand that the delegation led by Sanjay Jha and Shrikant Shinde will be the first ones. So essentially, the trip to Japan and UAE is going to be the first one. So we have a delegation leaving on 21st May till the 31st of May. It will go to UAE, Congo, Sierra Leone, Liberia. Then you have the second one leaving on 22nd May till the 31st of June. It's going to Japan, Korea, Singapore, Indonesia, Malaysia. Like that, there are several other countries in the Gulf as well. There is Saudi Arabia, Bahrain, Kuwait, Algeria. There will be, these delegations will go there, and then South America as well. Then, of course, Brazil, USA, Guyana, Panama. There is Russia, Slovenia as well, Qatar, South Africa, Ethiopia, Egypt. So, of course, these delegations will go to UNSC permanent and non-permanent member countries to clear out their stance. It is also India's effort to make sure that there is transparency so far as communication on what really happened during the Pahalgam terror attack and in the aftermath of that, when Operation Sindoor was conducted. That is clarified. This is a diplomatic procedure that India is following so that there is no disinformation or misinformation. Remember, that's been one of the challenges that India has faced, given that the Pakistani side has, unleashed a bevy of information and disinformation, misinformation and disinformation campaigns related to Operation Sindoor.
Thanks for bringing us all of those details. We'll be keeping you updated on that front as and when we have more developments from each of these 7 delegations. But let's throw some light on Nifty earnings tomorrow. 2 Nifty companies coming out with their quarter for FY25 numbers. That's ONGC as well as IndusInd Bank. Let's understand what the street is penciling in when it comes to ONGC's quarter 4 numbers and what we can expect. What are going to be some important factors to watch out for when the numbers do come out, because we are expecting it to be flat on a sequential basis, but profit is expected to increase. Let's take it across to Varun, who's here to help us understand what we can expect from ONGC's quarter 4 fine print.
Definitely. So if you look at the overall results, there could be some operational miss, but yes, other income and tax benefits, that is something that would overall aid the profitability of ONGC. We are estimating the revenues to be flat around 33,700 crores. The EBITDA would decline by around 4.25%, and the EBITDA margins could actually decline from 56.25% to 53.9%. But yes, the profit is going to increase by around 7% to 8,810 crores. Now the production, that would decline by around for crude, it would decline by around 2% on a quarter-on-quarter basis, and for the gas, it would decline by around 5% on a quarter-on-quarter basis. Also, the sales volume, they are expected to be flat this quarter. If you look at the benchmark crude prices, they are down by around 8% on a quarter-on-quarter and YOY basis, and also the Singapore GRMs, they have fallen by around 58% on a YOY basis. So this actually signals that the overall realizations could be a little bit flat. The overall GRM for ONGC, they could actually come down on a quarter-on-quarter basis. we will see how the ramp up the company does for the gas production and the oil production. That would be the key thing that you need to keep an eye on. But overall results, there would be an operational miss. Other income and tax benefits will actually aid the overall profit for this company.
So much for that, Varun, for letting us know what should we expect from ONGC when they report their Q4 numbers. But let's talk about the entire oil and gas space, Akshay, be it the downstream or the upstream companies. Which side of the fence will you lie when you talk about oil and gas space? And also, is that a sort of a sector that one should watch out for in order to park their money right now?
Well, honestly, from a short-term perspective, really, there are no triggers which I see on the charts which show a possible blowout move in the oil and gas space. If you look at the last few days of trading action, most of the oil and gas space has seen a good recovery or a bounce back, and they are in a phase where there is a short-term time correction on, where most of them probably will languish in a range-bound scenario. So really, if you're keen on the oil and gas space and looking for short-term trading recoveries or pullbacks, I believe the price structure of BPCL and HPCL would be the best among them. So HPCL, probably if you get it around 305, would be the right entry price on the dip to buy the stock. Similarly, for Hind Petro, if you were to wait for a slight dip around 390, that would bode well from a trading perspective. So yes, bullish on this space, but a time consolidation on. So wait for dips at the levels I mentioned for taking a fresh re-entry in these names.
Coming in on the OMCs and the oil and gas space. Thank you so much for that, Akshay, for getting us those views. Sudip, let me come to you. And before I come to you, let's actually take a look at what we're expecting from IndusInd Bank when they actually report their numbers. This one has been marred, and the entire Q4 has not been great for IndusInd Bank because of all the negative news flow surrounding it. And that's what the poll is also indicating, that we're expecting a weak Q4 numbers coming in for IndusInd Bank, where we are expecting there to be a loss in the quarter, that is a loss of about 284 crore rupees as against a profit of about 1,402 crore rupees in the quarter ago. If you look at the provisions, we are expecting it to sharply rise 84%. We are expecting the NII as well as the operating profit to see a decline as well for IndusInd Bank. And the troubles don't seem to stop actually for IndusInd Bank, Sudeep. How should one actually gauge this one, irrespective of the earnings or not the earnings? If IndusInd Bank has to make the cut, do you think it will be able to revive itself and get the credibility back?
The question is whether they will be able to revive themselves. I'm pretty confident they will be able to. Yes, this quarter was really a watershed or an unfortunate quarter for them. The forex loss of close to 2,000 crore. Then they had the microfinance hit of around 600 crores. And there are rumors of some more challenges which is brewing, and it's being analyzed at this stage. So yes, and on account of that, they will probably make large provisions in this quarter itself. So we will probably see everything getting cleaned up in this quarter. And post that, I think we will probably be in a position to look at the bank afresh and analyze it based on its fundamentals, based on its potential, and based on its capital adequacy numbers. The way I look at it, I think it's a strong bank. The promoter has already expressed its intention to recapitalize it if necessary. And the opportunity is huge in front of them. The management is changing. RBI is monitoring its activities very, very closely. It has got a large customer base. It's got a very large technology setup as well. So I'm reasonably confident, and considering that it is trading at a valuation which is significantly lower than what peers are trading at, it may be an opportunity for an aggressive investor to get into IndusInd Bank at this stage.
Okay, Sudip, thanks for that view coming in on the IndusInd Bank. So, weak set of numbers is what we're expecting, wherein we're expecting this company to have logged, this bank rather, to have logged in a loss on the net profit front for Q4 on the sequential as well as a year-on-year basis. But on that note, we'll let you go. Thanks everybody for joining us on the show. But